Hey, this is Steve Good on the Coin Chat, and I'm joined today by my co-host, Yuri Cataldo, and we are doing a collaboration episode today with our friend down under, Trader Cobb.
Hey, guys. Thanks for having me on the show. I appreciate it.
Good morning to you.
Craig. That's right.
Good evening to you.
Thank you very much. So we put our background images to represent where we are for you today. So I'm in London, so here's my London background.
Yeah, and I'm in Boston, which you would never be able to tell unless I told you, because...
And I'm in my office.
Yeah.
which is clearly down under.
Exactly, clearly.
Yep. It's obviously Sydney.
It is. It's upside down from us.
So obviously, the Opera House is just standing out for me there, you know.
Beautiful.
It's about as much as Tower Bridge right here.
Exactly.
Yeah, that's exactly right.
So the reason we're here, we should probably tell everybody, because who's Trader Cobb? So Trader Cobb, who are you? And then we'll tell your audience who we are, because then it's always good we know who each other is.
Yeah, no, all good. So basically, guys, I've been trading for 13 years. Basically, I was in London where I learned to trade and worked with my mentors over there, and been trading foreign exchange, commodities, stocks, bonds, all that sort of stuff. And I was sort of introduced to crypto in 2013, and no, I didn't buy. It was, for me, an asset class that didn't have the tools or the volatility, really, for me to have access to apply my trade, so to speak, to trade the way that I trade, right? I'm a technical trader. I use charts to make decisions. So I sort of kicked it to the curb, because back then I wasn't looking to be a technology investor or anything like that. I was basically a foreign exchange trader that did 10% of all the other stuff, right? And fast forward, I left London, came back to Australia, just kept trading, building business and trading. And then 2017 came in about June or July. And I got the phone call from, you've got like a mentor or something, and the right person calls you about a subject, and you go, all right, I was pretty happy to ignore it, but now I've got to look at it. So I went and had a look at it, and I was like, whoa, okay, there's charts, there's volatility, there's volume. Look at the moves. And so I started watching. I usually watch a market for 2 months before I start trading it.
Yeah.
And I couldn't find anyone that I was really comfortable with that could, tell me like what the non-farm payrolls of crypto was, for example. What's a fork? What does it do to the market? All these sorts of things that I needed to know, because it's not so much the trading that needs to differ from foreign exchange to crypto or any market for that matter. It's how it reacts to certain announcements and certain corporate things that come out.
In normal trading, we call that a corporate event, like a dividend or a stock split. So now we've got forks that replace stock splits, and you're like, well, what the hell does a fork do to this? Because now is the fork going to split the coin? Is it upgraded?
What's that got to do with anything? I
have no idea. I mean, and that's not even a soft fork. That should look like a noodle that's floppering everywhere,
Right.
So yeah, it was like, for me, I was struggling to find anybody that sort of had a similar background. Somebody that had not just come down in the last shower, not just somebody who just said, buy this token and it goes up and now I'm the greatest trader on earth. Right. Somebody who'd been around for long enough to know what they know. And I know they're out there, but I couldn't find any that I was comfortable with. So basically we started tradercobb.com. We educate traders now. So we've got a series of courses and that sort of thing. And it's really just a checklist-based strategy. There's 3 of them. They're the same strategies that I use in all markets, really. So we put it out there. I had no intention at all of doing any of this. None. I was just coming across to trade this amazing new technology and learn about it. It was really born out of frustration, because I thought, these people are charging astronomical amounts of money for what effectively was crap, like stuff that you throw away after the first year of actually learning to be a trader. Yeah. And I thought, if people are going to spend money, then at least what they deserve is something that's actually going to help them and not make them think they know what they're doing.
So it's really
spend money and waste all the time.
Yeah. Really interesting what you're saying, because I mean, Yuri and I got into crypto. I came out of the fintech industry, similar to you, but I wasn't a trader. I was more on the IT services side, providing services to banks, but I'd spent most of my career in banking with, big corporate stuff. And when I got into crypto, my first observation was, oh my God, what is this crap? It's like, have I gone back into the dark ages? Like, a login is so hard and the screens look like, who does the UI? It's terrible. And I started to go through a journey starting in 2016 of just figuring this stuff out. And then I dragged Yuri into this with me and said, listen, mate, we've known each other a long time, so you're going to have to look at this with me. We're just going to go through this. And we started to record our experiences of trying to figure out what's a wallet, what's an exchange. And we thought, like, we need to educate the people about what's what. So we started an education process of just telling people what it is. And that's kind of taken us on a journey of calling out scams, of which we've called out some great ones. Tearing up my contract with an exchange on the show because the exchange is a scam.
Wow.
And doing a little bit of analysis of crypto the way you do, doing a lot of fundamental analysis of projects, and we've expanded in that in terms of just, more and more. And that's led us to writing a book, which is being edited now with our editors. And it's going to be targeting for the general market to help people learn about how to get started. So, give it to your grandma.
Well, that really is the litmus test, isn't it? I mean, we've started a beginners type program like that as well. That's totally free. And the idea is that my dad's always like, I mean, he doesn't even know what, when I was in London, he thought I was a drug dealer. Like legit, he did. He's like, you don't work that much. You're always on holidays. I'm like, yeah, I'm a trader, Dad. I work like 8 till 10's my hours, and I'm done pretty much. If I've had the right amount, I'm out. And then you come over here, and I'm now talking about crypto. It's like, no idea. So the whole point of what we're trying to achieve now with how we're attacking the market is that, we've done well working with the crypto community, and we love them, and we're embracing them and helping them do as much as we possibly can. But what we really want is the blue ocean, because we need it, gentlemen. We need to bring the traditional investors in, and we need to make them understand this. So they don't just go to this snobby, that's silly internet money, go and play World of Warcraft. They actually start going, well, this is legit technology, and if I don't get in here, am I going to miss the next .com? And that's really what we're trying to feed at that very early stage level. Is, again, going back to what you said about your grandma. I'm the same. It's like, if Dad can understand this, we've got a chance. Yeah,
but that's exactly that. So that's what Yuri and I have been trying to accomplish, and trying to create a very light, fun, easy read, but also has anecdotes and has some stories of crazy things we've tried to do in crypto, like going to a coffee shop in Dubai airport and trying to buy a coffee with Bitcoin. And they're like, can I see it?
I think that's going to be a reality.
I've heard of it. What is it? Do you have one on you? I said, well, no, but I can still spend it with my credit card. They're like, oh,
I've got one. I got heaps in here.
Yeah. Now I've got this little WireX card, and that does.
And it's like, where is it? Where are they?
Yeah, it's in the air.
Where's the finger? So yes, the world is definitely changing, and we've got to make it simple.
Yes. Exactly. We need to simplify these things. We need things to work. We need things to be usable. I think there's a huge amount of room for improvement here. And I think this, if there's one thing for me that the bear market's done, it's gotten rid of a lot of the crap, a lot of the scammers, a lot of the people who thought they were like dreamers who could do all these great things, but actually the most fundamental thing missing was delivering real products to real people. And it's created an opening for us to get real people in now that are going to create real stuff. And I think that's, well, at least my experience, and Yuri, you can comment on this. My experience is the projects we've now been interviewing and meeting recently, who've been around for a while and are still standing and doing really well, they're all seeing the same light. I'm seeing this tone of, oh, we need to do something here. We can't just have a privacy coin. I mean, we have to build nodes, and we have to build a decentralized environment. We have to create APIs and SDKs to let companies connect into our environments. We need to create interoperability between networks. I mean, that's like, this is the language I'm used to, and I haven't heard it until the last 3 months.
All right. Yeah, and they're also starting to talk about revenue models and bringing in like just outside sources of funding.
I know, really, like what?
Which is exciting to see. You're like, now everyone's not just like some software company where we are like, we'll figure it out. They're figuring it out now. And the ones that are surviving are the ones with really strong fundamentals.
Yeah.
I'm noticing it too. I mean, the projects that we're seeing now that come to do a raise, they're still doing a raise or an ICO or an STO right now. They're not sort of a 2017 October to December, January, where it's like, oh, we're a couple of kids, and that's okay. Got nothing wrong with being young and entrepreneurial,
right?
But they do it it's like the equivalent of a school project. Here's a pretty picture of a website. Here's a video we put together so you can watch it on the website with all these cool pictures and the moon and all that. And here's a really poorly written business plan with spelling mistakes, which we call a white paper. Can I be $30 million? Yep, sure.
Exactly. Yeah, and they got it too. Yeah.
It was a great way for them to do that. But the problem that most of these have had, and I did wonder, back when it was going on. It's like, okay, so Ethereum's at 1,000, 1,200, 1,300, 1,400. Who's selling it? Do you know what I mean? Like who has a sound treasury management team that can actually, and who's got a CFO that's actually responsible and understands what it is they're doing? Or is this just somebody that they've gone, Johnny, yep. Do you want to be CFO? Yep, that sounds good.
That'll do. Yeah.
So what do we have to do? I don't know.
Yeah, we interviewed one project that actually had raised about 16 million, and here they are a year and a half later, and they've got 15 million in the bank because they sold their ether and they put it to cash, and they're just building their business. And we've actually connected them with other. It's a banking project, and we've actually connected them with some other real banking companies to integrate, and they're often doing this. It's like, this is amazing, really cool stuff. So that we've seen.
I think there was a huge amount of almost like pride in, oh no, we're crypto, we can't sell our crypto. No. You're not crypto. You're in business, right? You're using. It's not all about crypto. It's about using crypto to accomplish something, right? It's a tool. It's not the end goal. Do you know what I mean?
Why do you think people get so emotional about holding crypto though? Because I mean, if you're talking about holding Australian dollars and trading it to US dollars, people aren't all that dear about it. But the minute we get to Bitcoin, everyone's like, I'm a hodler, and no one wants to sell anything. And even I have to admit, I get caught up in this emotional rift where I feel like everything I buy in crypto, I can't sell it. And I don't know why. What is it about crypto? Do you have any idea as a trader what's creating this?
It's just an emotional cycle.
Is it?
Yeah. It's because people, it's an exclusive club. Okay. People that were in early, and it is still very early in my opinion, they hold it so dearly. It's their pet dog. You know what I mean? Like they don't want to go, oh, this dog's sort of getting old now, let's just kill it and get a new one. I want one that jumps around again. You know what I mean? Like,
can I just tell you guys a story about dogs as long as we're on it though, because this is really funny. They
hold it so dear.
Yeah,
you know what I mean? Like that's the thing, and part of the whole. There seems to be like a Gandalf sort of, stick in the ground, you shall not pass moment, where a lot of crypto people go, no, I'm not going to do that. And it's like, but this goes against everything that makes any logical sense in the world right now.
Yeah.
And it's like people will get so emotional. Like you look in the chat rooms, you look at the way people hiding behind aliases on Facebook and Twitter. Look at how horrible they get. During 2018, it was an absolute shit show of just negativity, rudeness, pure straight up attacks for no reason. And like I copped a lot. I'm sure you guys did too. And I looked at that and went, look, man, for somebody to be like that, that's on you, brother. That's on you.
Yeah.
If that's how bad you're feeling, I hope you feel better soon, because that's really bad. Like you shouldn't be saying stuff like that. There's no need for it. It's totally infactual. It's wrong. And you're doing it because you got your knickers in a bunch. Wake up to yourself, have a good day, and relax. It's all good. You know what I mean?
So before we jump to the charts, I'm just going to tell you my quick dog story. So I recently got another dog. We had I had been interviewing John McAfee, and then my wife had come to me at the same time and said, I found this rescue dog. He needs a home. And I said, well, it sounds like John. He's on the run as well. So,
did you name it McAfee?
We did. We named the dog McAfee. So today we discovered that because we were mixing a drink, and and McAfee was the only dog interested. He was desperately trying to get the alcohol. He was like trying to paw his way up to the counter, like trying to lick the counter. He's like, we're not giving you the alcohol, John. Sorry.
And he's running around short. It's just sniffing the ground everywhere in all the little swanky clubs.
He was that's right. Running in circles, like, please give me the alcohol. Now we know what we call the McAfee.
Good dog name too.
Yeah. It's a good name.
It's a good dog name.
Yeah.
Thank you. Well, Crypto Crow calls his cat Cardano. So, I figure there's got to be a lot of us with animal names in the crypto space.
I got to get on that dude's show. We've been trying for a while now. We just
jump in on one of the lives. He does them all the time. They're hilarious.
Mm-hmm. Yes, I should. I really should.
Well, we'll give a shout out to Crypto Crow because, maybe he'll watch us now. Anyway, should we jump into some chart stuff? I'm sure that's why everyone's actually here to check
We
us out.
should, yes.
Yeah.
So go ahead.
Sure,
Yuri's got his famous expression. He's going to say it now. Ready? Go.
Oh, I'm on this. To the charts.
Yeah.
To the charts. Got it. All right.
Yeah.
You guys can see. Yeah?
There we go. Yeah.
All right. Let me walk you through what I'm looking at on Bitcoin. I mean, look, there's a couple of things. First up, to introduce your viewers, listeners, however they are, wherever they are, to some of my methods. What you see on the chart here is the 10 and 20 EMA. I'll do this quickly so I don't take too much time, but the 10 and 20 EMA, exponential moving average, that's the only indicators I've got in the chart, along with the MACD, the moving average convergence and divergence.
You're using very short-term indicators. A lot of people are you're using very short-term indicators. So if we're looking at days, you're looking at 10 and 20 days, where a lot of people, including me, look at 9, 25, 50, 100, and 200.
Yeah.
Yep. No, I used to have the 200 and the 50. I just found that I didn't really use it. It doesn't really factor into my trading at all. So, each to their own. For me, it's all about this zone here. In and around this 10 and 20 period moving average that's where I see as an equilibrium point. Now, if I take you out and show you this, when it downtrends, it pulls back into there, and again and again. When it uptrends, it pulls into there. And, again, here's a downtrend over here. Pulls back in, moves away. Then they go away the other way. Pulls back in, moves away, in, moves away, in, moves away, in, moves away. So for me, it's the equilibrium zone in price. And I'm always looking for a good deal when I'm buying or selling anything. That to me represents potential for a good deal. The second thing is, I need to have a bullish candle in that area. I need to also have convergence. So as price is making new higher highs, the MACD is also doing the same. So they're in agreement. Now, the indicator of the MACD, it does not decide for me when to buy, when to sell, when to get out. None of that. All it is there to do is to show me when there is divergence. It's basically saying, yeah, you want to leave this one, mate. Doesn't mean the market's going to go the other way. It just shows me the probability of successful outcomes is lower. And for me, all I've got is probabilities in trading. I've got no other control over anything. So what I've got here on Bitcoin, it's pulled back into this cradle zone. Yeah. Bullish candle right there. As you can see, higher low, higher high. I'm a trend follower. Pulled back into here. Currently, what this is right now, it's a little bit of a bigger candle. So normally I want a bit of a smaller candle, but I've got to trade. So I've got an order in. To enter as it breaks the high of that, stop underneath the low of here. Now, if I look at that.
Okay, so you're buying just above it or trading?
As it breaks out. If it busts above them, I'm long.
Selling if it just goes below it. Right.
Yep. And what I'm looking, it's a relatively big candle. So I don't usually trade on the bigger candles, but then I've come back out. So higher time frame analysis gives me a much better perspective. So this is a daily chart. Let's have a look at what's possible here. If we break above this point here, which is 63.84, show you on the weekly, what we'll actually have as we break this point is a higher low, and then that will be a higher high on the weekly. Okay. Now, if we get that, we've got an uptrend on the weekly. Very new trend, but nevertheless, the first time it will be in a weekly uptrend since way back, since forever. Okay. Yeah. Big deal, right? So I looked at this and weighed up the reward to risk ratio. I got 0.5% risk on this. Thought if we can get up through here, and I can get my 1-to-1. So let's say I risk 1,000, I can close 500 of that before this level, which means I've got no risk on the trade anymore. Yeah. And then there's potential for it to run on a 5,000 and beyond. So my reward on this potentially, and I'll be trading this with leverage. The potential reward on this is very significant. Because if I do get this right, and we do end up having this as a point at which it's the next leg for Bitcoin, so to speak, and we do get on a run, then the reward upside is massive, whereas the risk I've managed it already by having 0.5% risk on that. Now, one thing I'm watching really closely at the moment, I see as being an absolute catalyst, is this, right? If I go back in time, in the most recent times when we had an uptrend on the daily, here it is here, higher low, higher high. There's our uptrend. Soon as we had the first bit of an uptrend come, sold back off, gone. Yeah. Then we had it over here as well. This one was more ugly, higher low, higher high, sold back off. Now, we haven't had an uptrend that's held its ground beyond starting an uptrend with a higher low and a higher high since back when we had the bull market, right?
Right.
So we've set the trend each time, and then we go and break it. Now, if we can set this as a higher low and push on to a higher high, it's the first time we've had a secondary move in what is an uptrend since back in October, November, December. So this point where we are right now, I see it as being very important for the continuation of what has been just a little bit of buying. If we can get up through these levels, I can really see us. I'm not saying we're going to get into a bull market. I'm saying I'll be bullish because it will be in an uptrend, and I'll be looking for long trades.
So you're really looking for something above about 4,000 right now. Is that right? Looking at your little line here?
Ultimately, I mean, look, in a perfect world, bang, I get filled, it climbs, it climbs, it climbs, it breaks through this level. We have a weekly uptrend. And then we start to see the closet bears coming out and saying, okay, maybe I need to become a little bit more bullish now. And the sentiment ticks up another gear. We get more of this good technology news coming out about it, because as soon as price goes up, journalists write positive things about the space. As soon as it goes down, they write negative things about the space.
Yeah.
And we'll start to see a little bit more, excitement, which is emotion, which drives price.
So when I'm looking at these two lines that you've drawn in here for this little, range, we're looking to break above to buy, or if it breaks below, then we just make sure that if we had a position, we get out. Is that right?
Yeah. So I won't be in this unless it breaks up through this
above it. Yeah.
Level.
You want to wait till it breaks above, but do you wait till it breaks above and closes above it and then opens again above, or you just say if it breaks above, you're in
straight through?
And if it breaks through even a tiny bit, and then you open your position, how far do you go down before you close the position?
Stop loss is here.
Right. Okay. So you've really got a gap of about 100.
Yeah. Like $150, something like that, right? So let's say it goes up. I get triggered here. I get put in by a bee's dick. How big's a bee's dick? Really small. That's what I call it. So, when you just like in. There you go. There's a bit of Australiana.
To be honest, I never looked, but obviously you have. So it says something about you.
Oh, you need a good microscope for that one. If I get filled by a bee sting and get stopped out, then
you get
that's
filled
so
by
rare.
a bee sting or a bee whatever, then I'm concerned about you.
Well, the sting is far larger than the appendage.
Yeah.
So I always trade with stop losses, right?
Right.
Always. Okay. If I don't know a point at which I'm precisely getting in and a point at which I'm precisely getting out, that's not a trade for me. I need to know both sides of the story, and I usually run a target as well, at least a first target. In this case, I'm not looking to a first target because for me, I've minimized my risk, so I'm happy to take a hit on that if it goes the opposite way. But what I'm looking to try and do here is I'm looking to try and get, take the opportunities that I get, that if we do get into a big bull run, then I can build more positions. So let's say I start with this one, get it right, and then we get another pullback up here, I'll take another position. So my objective is to build a very large position so that when we do get into that silly town, like over here, well, I'm making millions. That's the idea.
Gotcha.
Well, we'd like to do that with you if that's okay.
Yeah. You're welcome. Come to the party.
We're here already. I think that's why we're all in crypto already.
Yeah, I'm with you on that. So here's the other thing, right? Bitcoin is basically our index. We don't have an index in this market, so to speak. But watch what Ethereum looks like. Hey ho,
it's identical.
It's very similar, right?
Yeah.
We do have some resistance here. Ethereum, you could play out the same type of strategy. EOS has pulled back into that cradle zone. Look at how it pulls back in. Pulls, moves, pulls. Right.
So when you call it the cradle zone is what, the in between the two lines? In
and around.
Right.
So it's
so it goes up
just
above
outside,
it and then comes
just
back
inside.
down to the trending line.
Yeah, it's. I mean, because I don't use sloping trend lines. I don't use diagonals.
No, I see
my trading is
10-day or the day. Yeah. So 10 days.
Yeah, so I use a zone.
Yeah.
And I use horizontal. So there's no subjectivity in how I trade. It's all objective. I've got literal checklists. Like it's a thing you check off. That's why people can learn it, because it's a tick the box, tick the box, tick the box. Oh,
awesome. I love this.
Yeah.
Great stuff.
It's just the way that I trade. I'm my personality with you now is not, when I'm trading, it's I joke that I'm the accountant with, beige pants tucked in, short sleeve shirt and a brown tie. I go under total.
Oh, so you work for UPS?
Yeah, I go full UBS style.
Yeah.
But I need to take that emotion out.
So when you look at EOS here, so what are you seeing? And it's done a kind of pretty significant run up, and now it's kind of done a bit of a come down to your lower line of your cradle here. So what do you do in that now?
Oh, look, for me, this is what I call stalking.
Stalking.
So if you have a look at this where we are now, let's do a comparison, right? I'll tell you about Bitcoin, and I said, I have an order in right now, right? Bullish candle in this zone. Jump to EOS, And look, we have a bullish candle in that zone, but that candle's too big. It's far too big between where my entry would be up here and where my stop loss would be down here. So for me, I've put that into my list because it's pulled back in. Now that candle's going to close in about 2 hours and 20 minutes. All right. Roughly about then. Then another daily candle is going to open up, but it's going to open up somewhere around in this cradle zone. If the following day, i.e. the next 24 hours, is a small bullish candle, I'd probably raise an order on that. Same can be said. Let me take you on EOS Bitcoin as well. Have a look at this. It's been pulling back and trending really nicely. It's back into that cradle zone. And also look at this. It's back into an old level of support and resistance. And it looks to me like it's also
right on top of it now.
Yeah.
Look at that. 61.8% fib also in with that area and maybe a 38.2. Let's have a look at that. Yeah, in that rough area. So all the way, see, we got all these Fibonacci's. They're not perfectly aligned. I much prefer to have it perfect. But there's support. There's a couple of fibs. We're back in that cradle zone. I just layer a lot of different ingredients, essentially. So I'm not just trying to, my courses and what I do and how I teach and how I trade, it's not about learning everything about technical analysis because you don't need to know that shit, right? You just need to know what works. If you're baking a chocolate cake, you don't need to know what fish is. You know, you're not going to put fish in the chocolate cake. So why are we talking about chocolate cake with salmon? You know, when we speak of it like that, you go, well, no shit, Sherlock, right? But the bottom line is there's so many people looking at charts in that same respect, but they just don't know it.
Yeah.
Do you know what I mean? They don't know that they're putting apples with salt. You know what I mean? Like, and until you find the right chef, you really don't know what you don't know.
Well, if it's salted caramel apples, that's all right then.
Yeah, actually, salted apples themselves are really good.
Okay.
Just don't put salmon and chocolate in them.
Yeah, exactly. No salmon, chocolate apples.
So yeah,
you've got a personal favorite Binance or BNB coin. Do you want to talk to us about what that looks like? And just, we can talk.
Yeah, absolutely.
We got some fundamentals. So Yuri and I love to talk fundamentals as well. So we could give you some indications of fundamental things we see happening, which we really like about Binance. But I'd love to see your point of view on the coin side of it too. Yeah,
for sure. Well, look, let me take you through the chart. I mean, I'm not a fundamental analyst like you guys are good at. I'm a trader. That's where my skill set lies, and that's what I trust. A hell of a lot more than I trust the fundamental side of things. So I'm happy to understand what the companies are doing, but understand that for me to get to the level where you guys are at, you've done years of work on this, you read it all the time, you're a big part of it. So it does take quite a commitment. I understand how much work it takes for me to get to where I'm at with my trading. I don't really have the time to spend on the fundamental side as much as what you guys do. So
yeah,
I back myself with charts, right? Now, Binance had been on my list of, hot property for a while because it seems to have a relatively logical business model with revenue. So even though the token's not linked to that revenue per se, it would seem more likely that the token will exist considering that the business will likely exist because they've got revenue, this thing called income. Yes, crypto people, income is important still in crypto.
Yeah.
So
very important.
I saw this.
Why though? Why? Because we could just have our coins.
Why do you need money? Just use
we could pay our people in coins. I mean, Binance pays their employees in Binance coins apparently, and God knows how those employees are surviving.
Well, it's going on. As long as they're converting it to Bitcoin, they're fine.
Yeah.
So if you have a look here, we've got these higher highs and higher lows, right? Higher high, higher low, higher high, higher low. There's an uptrend, moving averages. Look, here's the moving averages in the correct order. My trade was back here. So just to refresh your memory, moved away, pulled back in. Let's have a look at Bitcoin quickly here because look at this, straight back down. Then I got my candle, right? Look at this. Where are we now? Right now, straight back down, there's a candle. Now, we might bang in and around here for a little while, but ultimately I'm looking to buy in this area, straight back down into the equilibrium zone, bullish candle. Let's move. Why has it done that? That's weird. What's going on? Oh, that's why. So if we come back to Binance now, straight back down.
And then you had a bullish candle straight away right afterwards.
Yep. And then it didn't really give me what I was after. It broke the low of that. This candle here was the one I took. Entry above the high, stop loss below the low. And obviously I have my first target up here.
After the big drop down and you see a bullish candle, do you trade straight away on that first bullish candle or you wait for the next day for the next candle to confirm it?
It depends on the ingredients that are present. So if it, like for example, this candle here, there was no order raised. It wasn't the sort of candle that I was looking for. Then it broke the low of that candle with this. And I'm like, come on, give me what I want. Give me. And then this one showed up, and I thought, okay, that's what I'm after.
And so you bought inside that zone there somewhere.
I just waited, man. I just waited to get what I wanted. It's when I'm trading, I'm not going to the market going, oh, where's the trade? Where's the trade? Where's the trade? I'm going to the market and going, are you going to fit in with what I want today? I make the rules, right? It's my money. I do what I want to do. Does the market allow me to trade today?
Yeah.
Well, it's not, I want to trade today. Not at all. I'm waiting for certain things to occur. And with that comes discipline. With that comes a lot of patience. A good trader will spend most of their time waiting for the right opportunity, because you don't have to trade often to do really well. I mean, you get a few of these moves. I mean, my first target was up here. It was about a 9 or 8 or 9 to 1 return on the risk. So because I've got a stop loss, I know there's no leverage here, so it's a different story. But first target was about a 35 to 38% move. And the reason being was it was back at the old highs. A little bit of resistance there, took first target and moved my stop to here underneath this higher low, then to here underneath this higher low. And now I'm hoping it pushes on to a new high. If not, I don't mind. I'll go back into Bitcoin. The whole point is to build a Bitcoin stack when it's a Bitcoin cross pair. And I've done that successfully. So more of the same, please.
Wow, great.
Very cool. So let's talk about Theta token, because I know that's one that you've been in and out of, and Yuri and I have been looking at that one a bit as well.
Yep. So again, the characteristics here, an uptrend, higher low, higher low, higher high. Now, I'm looking at the daily time frame only at the moment. It got a bit, this pullback was nice and clean. Again, guys, notice what's happened. Moved away, pulled back into the cradle zone, bullish candle, and then there's the move.
Yep.
You see what I mean?
Yeah.
So, you know, there's no doubting that the way I read the charts works. There's no doubting that at all, because you can put this literally the 10 and 20 on any chart you like, on any time frame you like, guys. Look, let's go to the 8 hour. That's where I got a trade here, right? Pull back in, moves back in, small bullish candle in that zone. Really nice move. Target hit, right? You can go down to as long as there's enough liquidity. You know, again, 4 hour it works. 2 hour right now. What have we got here? I know it's a bit messy, but you get the point. It's moved away, it's pulled back in, moved away, pulled back in, moved away. So, and this is just one of the strategies. I've got 2 others that I work with as well. I mean, for example, here, let me just do this, right? Let's layer this. Fibonacci from the low to the high. From this low, we'll go from here to that high. Just checking to see if there's any perfect clusters. There's not. So when I say cluster, it's a combination of the 38, the 50, or the 61.8. They're my buying clusters only. There's none that are matching up perfectly. So for me, there's no trade there right now. I have to wait for maybe a pullback in to the cradle zone, and I'm happy to do that. So
yeah, it works. You've just done a bit of a run up anyway. You're basically waiting for the next pullback down to get in. So would this be one that you'd be looking at as an example, saying it's got the right behavior right now, but because it's way outside the cradle zone, you're going to wait for the cradle zone either to catch up with it or for it to come back down to it before you make your move.
Spot on. Exactly. It's about, you know, people, the problem that a lot of people do in crypto and markets in general is this is when they get excited.
Yeah.
You should be getting in back here.
So let's do the flip side. It's done. So let's just say that we had gone in one of these other points in here, and now it's gone and done the run up. Where would you be setting your targets to sell based on what you're seeing here?
Yeah.
Well, that's a really good question. And the difficult thing is if there's not enough data on the chart, it's very difficult to get your target.
Right. Yeah.
I suggest always, especially when people are starting out, to focus on minimization of risk first. You know, if you're somebody who sells fruit, right, and you don't have any fruit, your business is done. If you're a trader and you don't have any capital, well, you're not a trader anymore. You're playing a video game, right? So for me, I suggest to scale out, which is to sort of take some off the table. So again, using that $1,000 trade example, if I'm risking $1,000 on a trade, and let's say I've got a $10 stop loss, just to make the math easy. When it moves $10 plus the cost of the trade, so let's call it $11, then I want to take that, you know, I want to sell $500 of that position in $500 of profit. So now I've got $500 profit on one half of the trade. The other half of the trade has $500 risk. Even if I get stopped out, my net loss is 0. So that's the first thing. After that, from my point of view, unless there is a key level of resistance coming up, like there is not here, there's nothing here, then it's really just about following the higher lows on the time frame, in an uptrend that is, on the time frame you took the trade. So let's say I took the trade here on this cradle, pulled back in, bullish candle. Right now, I will definitely have scaled out because it's moved plenty far enough. And here's the new higher low. My stop loss will have gone from the low of this candle to the low of this candle. Sure, I know I'm not in profit massively, but because scale out's locked in profit, even moving my stop to here, it means the trade will be profitable if that stop gets hit. Then I just got to be patient. And that's the hard thing. People see their account up by 10, 15% on one position. They just want to close it. Wait for it to pull back. You know, a prime example is this, right? SBTC. Let me show you this one. It was last year. Oh, that's looking great. Whoa. Oh, damn. That's a Binance. Hang on. Oh, no, there it is. Good. Just took a little while to load. So let's take you back to here. Very similar to where we are now, actually. Higher low, higher high, pull back in, took this trade, hit 1-to-1 immediately. Cool, risk off the table. Pull back in, well, gave another cradle, didn't it? Another bullish candle in that zone. Took my target straight away, shot up, took 25% off of here to lock in further profit, and then I waited. I had to wait a whole week. But if I had to close it up here because I was feeling good, I would have missed out on all that. So it's about planning your trade and then trading your plan. And you've got to have a plan before you go in, because if you don't, well, what are you going to do when things happen? You start to trade and think based on emotion. And I've got one very...
We always talk about, like, if you do a trade, if it's up 10% and it's good, take your money off the table.
Yep.
You don't need to run it up for another 10 or 20%. Take the 10%. You've got 10% more in Bitcoin than you had a minute ago. And it could be, like, you know, we pointed out a trade on Theta ourselves, and it ran up. It was up like 10%. I said, well, if you just, you know, you have two options. It ran up, you take your 10% and it comes back down. You can get in it again, or you just wait. For those who waited and it ran up again, they made even more. But now it's again, same thing. Now you're up 25%. Take your 25% or take some of it off the table. Don't just sit there waiting for the next move, because it might not keep going. I mean, right now, if you look at Theta, you've got two big bullish candles, one next to the next. Of course, that's great. And you might get three, but after three, you might want to think about it, because, you know, you're going to have a top out at the top candle where it usually does exactly what you say. It pulls back down to the cradle. So the same
just
kind
having
of
a plan.
Yeah.
Just having it. And the plan should be, you know, what I try and teach people is not just how to trade as far as on the charts. You've got to understand routine. You've got to understand who you need on your team. You've got to understand how to take screenshots, how to manage the trades, how to, you know, how to get through a losing streak, how to get through a really successful period. These are all things that, because I've done it for a long time, I realize how important these little elements are. Everyone wants the trading strategy. Show me how to trading strategy. That's not what makes you a good trader. It's 33% of it. The other 33s are how you manage yourself. Right? I got a hypnotherapist. I got a Bowen therapist, man. I see one each month or one each fortnight. Okay. And that's to keep me as good as I can be. If you don't feel well, don't trade. If you don't feel up to it, don't trade. Remember, you make the rules, so make them and stick to them.
Yeah. Craig, when you're looking through different projects, how do you find the ones you want then to trade into?
Oh, look, there's two things. It's volume or not volatility, liquidity, really. So for me at the moment, because it has been a little bit illiquid on some of the top 100s, if I get let me try and show you here. What's a good one? MKR. So if you have a look at this chart now, you'll note that it's a bit gappy. So what I mean is, look at how it's a bit funny. Let me get that out of the way. See how it's a bit funny through here? It's not smooth
there were
flowing.
Days without trades, right?
Yeah, days without trades, and it goes from here and it gaps down. A chart like this is illiquid. All right. It's very illiquid, which means that, you know, then you get these spikes where you got stopped out and you get a lot of slippage. Slippage means you don't get filled at the level you want to. And effectively it makes you hurt more than what you should have. So if I see something like this, I don't care how good it's going. It's not tradable to me. Look, go to the 4 hour. See, there's that gappiness again. I need to have smooth flowing trending charts. And what I call that is optimal chart structure. Now, if I jump up now and show you the top 10, even Bitcoin top 10 is fine, but I'll take you to the dollar top 10 because I like trading against a dollar with a margin, because the dollar doesn't move as much as Bitcoin can. So you look at Bitcoin, for example, nice, smooth flowing trend.
Yeah.
All right. You know, real smooth. All these top 10s are very, very, very smooth. So it means that I've got good liquidity. It means that I'm probably going to get filled at the levels that I wish to. I'm also going to be able to take on the position size that I wish to. That's another thing. It's frustrating when you find a great trade and you go, well, I got 0.2% on that I wanted to, because the volume just doesn't exist.
Yeah.
Look, there's a long way to go with crypto and blockchain projects that are listed, but I don't mind, you know, being Mr. Patient and waiting for the best opportunities, because the risk multiple stays the same no matter what market you're trading. The reward multiple is significantly higher in crypto. And don't forget, you can still make money shorting, and shorting is not a bad thing. It's not a dirty word. It's a derivative of the underlying. I don't make the market fall when I short. I take advantage of people that are selling.
Have the leverage that you use for, you know, to do margin trading and what have you?
Sorry, was that?
Which exchanges are you using for the margin trading?
Right. Which exchanges? The main ones are BitMEX and Bitfinex. They're the two better options at the moment for liquidity. There are other leveraged and margin trading options, but your traditional market platforms, unfortunately, as much as I trust them, because I've been trading with them for over a decade, they don't have weekend dealing desks, which of course I'm not going to carry a Bitcoin trade over a weekend with, you know, like naked.
No.
Bugger that. It's too much risk. Anything can
Yeah,
happen.
especially with what we saw this past weekend, to forget it.
Yeah.
Yeah. You just can't do it. So yeah, those are the two.
Great. Well, thank you.
Really cool. Anything, I mean, what we'll just tell you quickly about, you know, Theta, because we're interested in the project and you've showed us a bit of the charts. What we like about the project and the fundamentals, which is really interesting, is who's behind the project. So it's not just another ICO, but it's got Sequoia Capital China. It's got Samsung involved. It's got Sony involved. It's got the founder of YouTube involved, one of the former founders of YouTube, one of the former founders of Twitch involved. The founder himself has been a serial entrepreneur that's built an e-gaming video service. And now they're launching an entire video service that's probably going to be somewhat competitive with YouTube, but with a lot of other things. And when you see that kind of a team, and then they're saying that, you know, their product, their platform is launching on the 15th of March, we're looking at those fundamental things like their wallet. When did you say their wallet came out, Yuri? It was like the other day, right?
It came out like yesterday, the day before. It recently just came out, so that's running out.
So what happens? The wallet comes out, the coin goes up.
Yeah.
So we were looking for some fundamental news. So if you look at that, the wallet came out. What did the coin do? The platform's coming out 15th of March. We're looking at, holy crap, when the platform goes live, what the hell's going to happen? Now, you and I, Trader Cobb, you know, both of us know sometimes things run up. It's priced in already, and then you sell into the good news and it comes crashing down. So this is where you go, you know, maybe on the 15th of March, it's going to come flying back down because the fundamentals are going to be big news equals a reason to get to cash out.
Right.
Yeah, that's right. But it's quite interesting, you know, like when good things happen in uptrends. Okay, bad things happen in downtrends. It's usually the way it goes. So, you know, there's a lot of people out there that say, "Oh, your technical analysis doesn't work." Blah blah blah. Okay, that's fine. If that's the way you want to be, that
if you're not making money doing technical analysis, then you're doing it wrong anyway.
Well, that's right. Exactly my point. I mean, I've built a career out of doing it. So basically, it's like, you know, it does work, and it's like, oh, fundamentals only move the market. I'm like, yeah, you're right, but there's also volume that comes into that, and it happens in patterns. And you'll typically have more good news coming out to a project that's in an uptrend than you would if it's in a downtrend, and vice versa. If something's in a downtrend, it's likely to stay in that downtrend until something happens. Yeah. So it's about following those trends. And, you know, I don't need to know the fundamentals to do well in crypto. I just need to know how to read the charts. And thankfully, that's something I can do.
Right. For sure. Well, this is great. I mean, I don't think we need to go into too much more. I think this has been a lot of fun, just kind of getting into this and talking through, you know, what you do and us telling you a little bit and your listeners and community about what we do, because obviously we do something the same and some things different. But obviously we're here to have fun, and that's what crypto is. It's fun.
Absolutely. It's fun and profitable too if you do it well. But gentlemen, I do have to jump across and do my top 100 scan with my members in a couple of minutes.
No problem. No problem.
So, look, I would like to speak to you guys again for sure.
Yeah, we'd love it.
Should definitely do it again. Look, for anybody who's watching this and listening to this now, you know, yes, I've got paid courses, but you can just go to tradercobb.com/free tools. Okay. And guess what? you get a bunch of free stuff. So go check that out. Sign up there, tradercobb.com/free tools. And then you can, like, you've heard me talk about the cradle candles and all that sort of stuff. We've got 3 strategies. There's a webinar there. I'll show you what those 3 are to give you a better understanding for what we're looking for. And whatever you do from there, hey, that's on you. But just to get a bit more in-depth understanding for what we do here, that's the place to go and find it.
Yeah, and to find us, because our video, of course, will be, you know, shared on both channels. So
yep,
we've got our own Patreon channel, which is patreon.com/thecoinchat, or you can find us on YouTube at The Coin Chat. The difference in our content is on The Coin Chat, we're covering a whole range of things, including interviewing a lot of the hot projects and trying to identify the fundamentals and the things that they're doing and where they're going as reasons why you'd want to follow those projects. On Patreon, we're doing more technical plus fundamental mixed together to try to identify projects and opportunities for buy and sell, but not on a day-by-day basis, but more to give people indicators or tips of hot projects, reasons they should get in, reasons they should get out. You know, so if we see something that's awful, we'll tell people, look, you shouldn't be in this project because fundamentally they just don't have their game together. We don't care what the chart looks like. They might be out of business in 2 months.
Right.
Yeah.
So we try to
you
bring
guys
that
have got what we
together.
don't have, and we have what you don't have. It's a perfect match, really. So your audience come across here, my audience go across there. Let's all learn together.
Absolutely. Let's get our audiences working together. Let's, you know, subscribe to our channel, show us some love.
Perfect.
And to our audience, please subscribe to Trader Cobb's channel. We will put the links down below for each of each other. And we'll put the link to Trader Cobb's website as well, because we all want to have some fun and we all want to make some money and we all want to make money together in crypto. So let's do it.
Gentlemen, it's been an absolute pleasure. Thank you so much for your time. We will speak again soon. I do have to run. I'll drop you an email and we'll do this again sometime in the future. Thank you, everybody.
Awesome.
Great job. Great meeting you. And we will speak again soon.
Good on you, boys. Thanks so much for your time.
Thanks, everybody, for listening in.
Cheers, guys. Bye.
Bye.